Welcome, everybody. It is November 12th. Scott Riley, the Market Update Desk. We've got a little bit going on today, and it looks like some positive news is coming out of Washington. Surprising. So the Senate passed the full vote on reopening the government, what's called the continuing resolution. That has moved on to the House, and they're scheduled to vote, I believe, later today. If that passes, then it goes to the president for their signature, and then government can magically reopen and get things back online. The main thing from the financial aspect that we're looking for from the government side is generating the reports. We've got the BLS jobs report that didn't get put out, CPI, PCE, also the JOLTS report. So those are gonna get released probably later this month. Hopefully, by the time we get to Monday, we'll get a schedule of when those things are going to come out. And then we'll start to see some market reactions to both the timing of that and expectation. So, what we've got out there today, Fitch reports auto loans, the 60-day delinquency rate on auto loans was up 6.6% in October to just a hair over 14% for the year. That's up from 13%. So it is a sizable increase and additional crack showing in the economy from the consumer standpoint. Now, when we look at some of the micro data within this, 28% of car loans are actually, 28% of cars that are traded in for new cars have negative equity in them. So that's an alarming amount. We're also seeing subprime loans are growing in their usage in car sales and car lending. So when we're talking about subprime, that's elevated interest rates, which could also be one of the causes of this negative equity. People are paying less on principal, and they've got a higher balance on their car when they go to trade it in. So those are things that we're watching pretty closely. Now, the Dow, yesterday, the bond market was closed, stock market was open. The Dow was up 400. Today, the Dow is up another 300. So we've got a lot of activity within equities going on, and we are starting to see a flow of money from the bond market to the treasury to the equity market. That's one of the things we're watching. Will it put pressure on mortgage rates? That's what we're kind of following today. We also got word that Fed President Bostic is going to step down at the end of his term, which is in March of next year. Now, one of the interesting things with Bostic is that he had an inquiry done on him. Looked like he did some trades during what's supposed to be a blackout period for Fed members just prior to Federal Open Market Committee meetings. So that's going to be an open Fed president. He's not a voting member, and he's not on the FOMC, but he is a Fed president. Now we're looking at the market today. 10-year treasuries, looks like they're down 1 basis point to 4.0577. Mortgage-backed securities are down 7, and I think part of that has to do with this flow back from bonds to equities. Now, we'll see what happens later in today. The great news is we got another buyer's offer accepted last night. So we talked to him, got him locked in before this slight adjustment up on rates that we're seeing today. Give us a call. We'll help break down numbers. We'll help get you pre-approved. It is, we got some sunshine out. We're supposed to get some warmer weather this weekend, means we all can get some yard work done and maybe play outside a little bit before consistent snowfall comes. Just means now is the time to get out there and start looking at homes, because when we get into the spring market with the activity we've been seeing in this last quarter of the year, it's picked up, and that's going to be a precursor to likely what we're going to see in the spring, with an additional group of buyers coming in the market because of lower rates in the high sixes, low fives. Low sixes, high fives. And if we get more buyers, we're not going to get a parallel amount of sellers in the market. So we're going to have an increased imbalance of buyers to sellers. That's going to likely lead to upward price pressure. We're here to help you out. Give us a call, 616-293-2189. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan. Have a great afternoon.